I want to welcome James Haft. He has been in the banking space and early stage venture capital space for nearly 30 years in emerging markets in particular. And since 2015, he's been focusing on cryptocurrencies, and he's been advising ICOs, and he's been actually co-founded 2 other crypto startups. So I welcome James. I welcome Joe Gallardo, partner at Pepper Hamilton, and Angel Cologne to join me on the panel. Thank you.
We lose Angel? Angel, you here? He'll appear. So hi, I'm James Haft. I'm partners with Lou Kerner. We formed Crypto Oracle. We're raising a fund to invest in ICOs and blockchain-related companies. It's going to be a fully tokenized fund. And we're here with Joe Gagliardo from Pepper Hamilton and Arturs. So Joe, why don't you introduce yourself?
Thanks, it's great to be here. Joe Gagliardo, I lead our technology and blockchain practice at Pepper Hamilton, our New York office, and we represent obviously blockchain companies both on the issuer side as well as the investor side of things.
I think I'm covered. I'm the founder of FIC Network.
So why don't we start with, first of all, show of hands. Who here has bought Bitcoin or cryptocurrencies? Okay. Who here is invested in a fund that's invested in cryptocurrencies? Okay, interesting. All right. So, what's happening right now is that ICOs and crypto businesses are being invested in by people who have crypto already, right? And what's happening in the market is that the outside pressure of fiat investors is starting to push on the companies and on the valuations. We're starting to see things pop. But the truth is that the fiat investors, the real investors, Fidelity, Trust Company of the West, and the big managed monies, the big circle that Arturs put up there, they haven't gotten in the game yet. And they all represent big money that wants to figure out what's going on with blockchain and with Bitcoin and with the ICOs. And they don't even understand what the underlying technologies are. They just know it's a thing and it's growing fast. This is the single fastest and largest accumulation of wealth and redistribution of wealth in humankind. Right? Nothing's ever grown this fast, and if we go anywhere near the rate in the future that we've gone in the past, this is going to blow everything out of the water. So you got to be involved, right? And people are starting to figure that out. You guys are actually a pretty knowledgeable crowd, so we're going to kind of talk about what it takes to bring in the fiat investors, to bring in the legacy investors. What are the bars for them to come in? And what do they need to do, and what's the market going to look like, so we can kind of take advantage of that, maybe front run on this huge amount of capital that's about to come into what's really a small market right now. So let me start with Joe. Joe, why don't you talk about your practice?
Yeah, sure. So let me talk just a little bit about why we think this is different, and so why there's so much excitement in the space. I want to make sure that we separate sort of this token movement in the cryptocurrencies from the underlying technology, and I try to explain this to people that are just trying to understand it. So we have the underlying technology and surely the tokens that are enabling something, whether they're enabling it in the way that they're creating capital for a company to build a platform, or enabling it because it's access. A coin is access to a particular platform. I think the big difference that we're seeing in terms of early stage companies raising money is that this is not just capital raising, but it's democratization of fundraising, right? So we've got community building coupled with fundraising, which is something that I don't think we have seen in the history of investing in or in technology.
Right. I think another thing that Lou and I talk about a lot with the legacy investors we're looking at is they look at the dollars, they look at how much money you can make. And I think that people in this room, the people who are the early adopters, we look at this as a political and social movement. This is like, I want to control my money. I want to control my destiny. And I think that once the population gets bitten by that bug, I don't think it goes back. And I think that's really where we see the protection or the open door for things to go forward. Angel, why don't you talk about what you're doing in terms of opening up the markets to new investors? Talk about your product, please.
So, Angel Cologne, CEO, Managing Director of Turing Funds. 15 years investment banking, and we decided to develop a product that allows the institutions, the family offices, the pension funds, and ultimately the retail investors. And we actually want to tap into the $1 trillion, not the billion, but $1 trillion market of retirement accounts. Turing Funds is going to be a investment product that is going to be listed on the Paris Stock Exchange. Anyone with Euroclear, Euronext will be able to access and buy it. It's going to be a tracking fund, so 3 funds, blue, red, and black. So blue will be what you call the Dow, which is Bitcoin, Bitcash, Ripple, Ethereum, Litecoin, and the like. Red is pretty much the masses and what we call the S&P 500. And black is going to be derivatives, shorts, ICOs, things of that nature, but it's an interesting concept. So listed, insured. So insured is that anything that's on the cold wallets will be insured by a A plus rated insurance company and rated by a credit default. So basically we're rating it on the assurances that the insurance company will pay out if something were to happen to the cold wallet. I think this will attract a ton of people. We've already soft circled about $25 million from wealth managers, and we're looking at about another $200 million from Dubai. We are very excited about this. We're thinking of it's going to launch in Q1, and we've already got a lot of investment bankers very interested in this.
I want to talk out loud so you guys can keep the mic. Who are the investors in the fund?
So right now the investors brokers are getting calls. They're getting calls from their clients. What is Bitcoin? What is Bitcash? What is Ethereum? What is this? And they are seeing that they're losing money in terms of being able to get that commission. So though it's building communities, it's all about actually getting great products launched, getting anything that you would think about becoming a possibility. What's happening now is these guys, they're driven by money, and it's greed. It's nothing that we can, it's in the room. It's the 8,000-pound gorilla, or 9,000 people that signed up, and the police that are downstairs crowd controlling right now because there's a lot of people angry that they can't get in. So what's happening is we're giving them a product that they can actually get their clients into, which eventually is going to actually fund products that you guys or projects that you guys want, because it's going to move that traditional money and that old money into this market, and it's going to legitimize what Arturs is doing and what the panelists are basically getting.
So, Arthur, who are the investors in your concept? Who will be investing in your company, and who will be using the product?
All right. We're focusing on the institutions mostly. For example, next week I'm going to Europe to speak with more than 150 family offices and funds to basically get them on board and start using the platform once we build it out.
Okay, so I want to ask each of the panelists, what's changed over the last 6 months and what's changed over the last month? Because if you look through the last month, there's been a tremendous growth in activity, in volatility, in price, and in volume. So what is it that's changed now, and is that going to continue, and how do you see that going forward?
Yeah, so we're getting a lot of calls from traditional investors, private equity and venture capitalists, sort of asking questions, how do I get into this, and what things should I be concerned about? And they're mostly concerned, they're concerned about a number of things, right? The whole question about utility versus security tokens, that's certainly on the top of their mind. But at a fundamental level, these are traditional investors that are used to getting a board seat and having a waterfall or having preferred shares, and they're investing in these tokens or thinking about it, and you can't get their head around the fact that they don't actually have equity or an interest in the company, right? They're buying a purported utility token, and what's the use for? So it's either for speculation and or it's being used for some utility. And it's a complete paradigm shift in terms of how they invest their their dollars, and of course they have to think about that in terms of how they how they treat their their investors, right? So it's a complete paradigm shift in that sense.
Same here. So we're getting calls from. There's a lot of things that were going on in the market that you guys are not, unless you're investment bankers or private equity or hedge funds that don't understand what happens in the marketplace. But so in mining, there's these things called streaming where they will invest in a mine, and then for perpetually they would get 10 to 20% of whatever that mine produced, and it was unfair for them. So they're seeing these ICOs, they're seeing these ability to actually change the market, to basically disrupt, and that's what I'm all about, is disrupting the old guard in terms of these companies being able to tap into your money, and you guys are going to be able to actually profit from that. You guys are going to be able to invest in something that is tangible. So these people, there are groups out there, obviously you hear scam ICOs, we hear that all the time, but there are some legitimate companies that are coming out with real products, real things that you guys will be able to benefit from. And that's it. We're doing it all for you guys. We're doing it all for the masses. We're doing it all for the community. We're doing it all for the ability to actually get this money to build a product, to build a better future for ourselves. Not only for ourselves, for our children, our children's children, our grandchildren going forward.
And Arthur, talk about what's happening in Asia.
Yeah, well, I think in general the crypto market is currently experiencing a rapid boom in adoption on, first of all, on retail market. If you look at the volume on the exchanges of new accounts, it's insane. Exchanges cannot support their customers because they just lack the resources. On the other side, for example, Ethereum network is getting congested because a couple of days ago an app was launched, and I tried to send Ethereum to a wallet and I couldn't get it through because there is an app called Crypto Kittens that is basically getting like the whole network congested, and that's pretty incredible. That's on the retail side. In Asia, I have experienced that, for example, Japan is very conservative, but they have Bitcoin extremely adopted in the supermarkets, and I talked to a lot of exchanges there, and they want to regulate the market. They want to follow the regulation, and I believe it's for the better good of the whole market. Same thing in China, I believe. Even though they have banned the exchanges, I think that it's a good thing for the market, because exchanges that will be regulated following the KYC procedures, it will be good for the whole market worldwide. On the other side, institutional money is flowing in. For example, the futures market, next Monday, is it? Monday, it's the...
2 weeks.
I think it's on the 10th. Yeah.
December 18th or 10th?
December
18th.
CBOE on December 10th. Yeah, they basically won the market in that sense. So I think the next step is really about adopting the Bitcoin, Ethereum, and other currencies for number of applications, both retail and then for institutions as well.
Yeah, so another interesting thing that's been happening over the last, I guess, 6 months or so is that we have gotten some calls from state employees and state officials and local regional officials, and those calls are usually, you're usually concerned about that when you're a lawyer and you get a call from a government official. But it's a positive call. They want to learn about this. They want to try to understand it. They're making an effort to understand it. And actually, particularly at the regional level, are looking at this as a way to foster innovation within local communities, which is a really, for me and for the technology community, that's really positive when you've got government looking at this as a way to have positive outcome for local business communities.
So I want to get to Q&A, so we're going to have one more round of questions here, and then we'll get to question and answer from the crowd. Well, if we jump in now, I have one more question for these guys, which is, what's next? What do you see coming up first quarter of next year, first half of next year, that's going to be different about what we're thinking about now, that's going to represent the opportunity that you want to try and be ahead of? I'll throw one out there right now, DAGs, right? the platforms that are going to replace the blockchain. They're going to get rid of the lack of scalability and the expense that are involved with the legacy systems. You know, there's IOTA, which was up on the last one. There's Hashgraph, which is going to come out and be really hot. And I think you're going to start to see new technologies where blockchain really was just a step in an evolutionary process. So to me, I'd be watching those platforms that enable other activities on the platform.
So the regulators are going to work to figure this out, but I think what is equally as important is that there's a movement in the tech community, particularly the ones that have a voice, to work hard to self-regulate. And I think there's going to be sort of a coming together of sort of regulation. This is what we hope, and what's going on out there, so that this can actually scale, and companies can issue tokens and run blockchains in a way that is completely compliant, so that we can scale and actually bring this to the next level.
So something I didn't mention in the beginning in my bio is I'm also a co-founder of a platform called Bank, bank.co, which is a Reg A Plus platform. So with the ICOs coming on the regulations under the SEC, we're trying to find novel ways to actually issue both utility tokens and security tokens using the Jobs Act by Obama, which is the Reg A Plus, which allows you to raise up to $50 million in a 12-month calendar year. So you can raise $50 million in 12 months and then go back into the market and raise another $50 million. But there's different ways to get around basically raising a lot more if you have subsidiaries and so forth. But also, Arturs and I were at was it Penn Station, right? Where I came up with the idea of using the Reg A to issue a utility token in all of 5 minutes, and the security attorney that was sitting with us was like, yeah, that works. So we figured out a way to actually issue a utility token through a security using one share, and then fractionalizing the share, and then using the Snapchat exemption of no voting rights, and then just keeping it completely off the balance sheet, which then allows for you to issue a utility token. But that's what we're seeing. We're seeing a lot of the ability to go out there and use these regulations. So it's sort of like the Matrix is what I say, is you basically want to just work within their rules. You can bend them, you can bring them to an nth degree, but don't break them. But as long as you actually say, hey, this is what you guys said we could do, and they can't say no, all right?
The one term in the crypto is hodl, meaning that people hold their assets and don't use them or do not convert to cash. So I believe that the next year will be the year when people will be able to hodl with interest.
Just one last thing though, I was introduced to a company on Friday, I won't name it, but it was very interesting. They actually are a money remittance company, and they've set up their own coin, unbeknownst to themselves. They just did it themselves. They set up a token, and they're making money by exchanging into this token, and then obviously paying, doing top-ups if your mom lives in Mexico or Europe and you want to pay their utility bills, or you want to pay their cell bills. But what caught my eye was no marketing, no advertising, invite only, 3 million in a month, 3 million users in 1 month, and worldwide. And we're talking to them about using them as a platform for ICOs, because they see a value in terms of basically funding these things through this platform.
Cell phone based?
Cell phone based. They have an app and everything.
So I think the cell phone's going to be the gateway to everything. It's going to be hard here because there's only one microphone.
You can repeat the question.
Okay, so someone over here.
I'll shout, I'll speak very loud. Question for James and for Arturs. Tokenized funds and bonds, if you offer them to non-accredited investors, there's no escape. They are securities, whatever you do. So how do you deal with SEC unless you're based in Slovenia?
So let me just read the question. The question is tokenized funds, which is kind of the holy grail for the funds. How do you deal with the SEC, because the rules don't exist yet to even know how you would comply, and if you are out of compliance, it's a felony, and you have a problem with unaccredited investors. So how do you deal with that? for bonds and for funds.
Technology and blockchain can be decentralized, people cannot. So I believe that the regulations will apply locally, and I think that the long arm of the SEC will follow you wherever they need to do. So that's why we're actually committed to full compliance and actually starting with the institutions and providing the technology for them to deal with the market in a more efficient way.
So non-accredited investors.
So you're gonna have to find a way to register securities to get non-accredited.
And your product is also for accredited investors.
So the answer is, and we have a lawyer who can probably handle this better than I can.
Is that a question about like token? We're purely utility.
So Arturs handles this by having a utility token that lets you profit from the activity on the platform without actually touching the security. Okay, that's a novel way to do it, and that's being a utility token protects you. For now, they'll change the laws, I promise. But our perspective is that we are going to raise the money through a SAP, through a pre-sale of the tokens. We're gonna wait until the legal structure is well explained and defined, and then we're going to tokenize and distribute the tokens and list on the exchanges, which don't even exist yet.
Yeah, I think we have to just, so there's three categories of tokens, at least at a really high level. There's a utility token, there is the SAFT framework, which is the contract itself is a security that ultimately converts. Well, it doesn't convert, it issues a utility token. And then there's a true security token, which is what I think you're talking about, right? A token that represents an interest in a fund or a bond, and that's a security. And I think that sort of Angel talked a little bit about platforms for trading security tokens, right? And that's what's going to have to happen, and that's what we hope sort of the frameworks and the technology will be built out for that.
Is the question, how do you value a Bitcoin?
No.
The underlying intrinsic value of Bitcoin. Who wants to handle it?
Oh, you want to handle it, right?
First of all, is the first digital asset that is being created by committing electricity. So to create Bitcoin, you need to commit basically consume electricity, vast amount of it. So essentially, it's sort of like energy being turned out into Bitcoin. That's number one. That's like the direct way how to think about it. The second way is scarcity of Bitcoin. So there's only will be 21 million of Bitcoins ever, which means that more and more adoption is getting into the market, less Bitcoins for everybody, right? So that's kind of the second way how to think about it. And the third way,
let's say evolution. I mean, remember, Manhattan was bought by what, $24 worth of trinkets. So at one point or another, something has to have some type of intrinsic value. I think that's at the end of the day. I mean, dollars, euros. Remember, it's a trust. So we're trusting the community then. At the end of the day, the intrinsic value would be trusting the community that there'll still be something there, right? So remember, they had the peseta, the lira, the franc, and all these other currencies that became one. At the end of the day, we have to basically look at that aspect.
So remember earlier I said that there's a political and social aspect to Bitcoin, blockchain, and this whole distributed ledger movement, this movement that's happening. A part of the answer to your question is, what is trust? Because you're saying the U.S. dollar has the full faith and credit of the U.S. government, right? And we looked at a chart up here that showed how much money is being printed. No one thinks about it, right? It's no longer backed by gold. It's backed by a government that I'm not sure anyone trusts any government now any more than they did 10 years ago. And there seems to be a direction that trust is going in terms of governments and centralized organizations. And when you have something like Bitcoin, which trust is based on consensus and rights which can't be changed, all of a sudden I know how much Bitcoin is out there. I know that my Bitcoin is real because of the way the system works. So so some people, not you, it's okay, but some people would rather trust an algorithm than chase.
I thought that's what blockchain.
That's Bitcoin is a application that lives on top of blockchain. It's simply example.
What is the that's blockchain. Whatever you're saying.
So I have 30 years experience in emerging markets. Okay, I took public the first company in China to list on the New York Stock Exchange. When we did it, foreigners were not allowed to own assets in China. It was illegal. It was illegal for the Chinese to have U.S. dollars, but they all had mattresses stuff with them, right? So I took the shares of a Chinese company and I put them into a BVI company and I floated the BVI company on the New York Stock Exchange. When we did it, half the funds we went to wouldn't take a meeting with us because they didn't believe the Chinese had laws and they didn't believe that there was value to having a partnership with a Chinese government entity because the Chinese government could do whatever they wanted, you know. And back then, the market cap of Chinese public companies was minuscule, right? And look where we are now. So I'm not saying it has to be the same, but having done all these emerging markets, which included countries and then included technologies, there's always people in the beginning who say it doesn't work, and we don't need e-commerce, we don't need cell phones, we need a phone when you're walking around the street, right? So, you know, those things will happen. I think that's what Bitcoin is. So, Angel, when's your fund listing?
So we're gearing for end Q1. So basically the process is around a 6 to 8 week process for the listing, for the fund to be set up. Compliance goes through. Ours is a hedge fund with an ETF wrapper. We like to say it's novel, but allows you to basically, it's liquid. So you can basically buy in and sell it. So you can call E-Trade, Schwab, Wells, Merrill Lynch, and then buy.
This gentleman over there, he's very...
Yes. So we'll go through the process of, as long as you have Euroclear and Euronext, your broker clears that, then you can actually take the money.
Over here.
Hi, my name is Daniel. So my question is for the audience. So I know that you guys target institutional investors. So I guess that most people here are not institutional investors. So why you are having this event and kind of like roadshow the company to this audience?
So the funds are available to all retail investors. They're not available only to institutional investors.
So as a retail investor, you'll be able to get into it. As long as, once we come out, we'll come out with an ISIN, because it's going to be listed in Paris. We are sitting down with the NASDAQ to discuss a product that can track it, because the Parisian product, the listing is more listed like a bond, more like a mutual fund. It has an NAV, and it's on a weekly basis, so it has a net asset value on a weekly basis. It just becomes too cumbersome and too cost prohibitive to actually do it on a daily basis. So you will be able to buy it as a retail investor.
So the question was, why is Angel presenting to this crowd if he's looking to sell to institutions? I think another part of the answer to that is that one of the dirty little secrets is it's really easy to get into crypto. It's really hard to get out, right? So these market products, you know, we all look down on regulations, but if it brings with it liquid exchanges where you can buy and sell freely, it becomes much more attractive, I think, in the long run for individuals.
On the idea of getting out, you know, everyone that's in the community says hold on for dear life, but at some point people are going to want to sell, be that as it may. Any thoughts on the taxable implications of people that maybe bought $10,000 worth of Bitcoin and now it's worth $1 million, and these huge gains, and if it becomes a currency eventually, you wouldn't have to pay tax if you took that Bitcoin and then you bought a house with it. If you bought euros right now, you wouldn't have to do that either. But like, any thoughts on where the taxable landscape will be in the next year or 10 years, and thoughts on people liquidating into the future?
There's already pretty clear guidance on that right now.
Yeah, the IRS has been pretty clear that it's treated like property. So if you buy it and you convert it into another currency or use it to buy something, it's like selling, and you sell it whatever the current price is.
So that's now. Do you think it'll ever be, if it becomes a currency, then you wouldn't have to pay capital gains on those gains that you have? You'd be able to buy a house with it, and it's a currency if they ever deem it a currency.
I suppose. I mean, right now the guidance is that they treat it as a property, and so that's that's sort of how that's how it's being treated.
My experience is whatever's worse for us, that's what the government's going to do. Let's try to pick someone, the gentleman over there with more hair than me. So again,
When Arturs is in Asia, would he talk to any government officials that are trying to facilitate blockchain technology?
so government officials trying to facilitate blockchain, the adoption.
Legislation or programs or anything. The question was, has any government officials been trying to facilitate or regulate blockchain?
So have governments tried to regulate blockchain? Earlier this year I presented at North American Blockchain Association event in Silicon Valley, and it's actually run by Chinese, and there were a lot of Chinese local governments together, and there's a lot of movement into actually creating these blockchain ecosystems. So they are very bullish on blockchain and less bullish on crypto for now. In terms of Japan, they're very conservative, but they're moving slow. But I think it's in terms of their adoption, they want to regulate all the exchanges. They want to basically prevent unregistered token sales. Actually, one of the regulators in Japan wants to regulate and register every single token that will be listed on Japanese exchanges, crypto exchanges. So I think that's all I can tell right now. But I met with a couple of both exchanges and also market movers.
With over 1,300 crypto assets in existence at the moment, and ICOs seemingly happening every week, the SEC finally cracked down on what seems to be a fraudulent yesterday. Where do you see the number of different assets? How many assets will be there? Crypto assets will be there in a year from now, let alone 5 years from now, because there must be some inevitable weed out event that gets rid of Dogecoin or Fuckcoin. Or if you scroll down, you see all these coins that you can't even believe are there. So I'm curious to know when that will happen.
So the question is that with thousands of crypto assets have been launched in the last couple of months, and hundreds every week now, at what point does the market become saturated, and how does the number become weeded out and more manageable? Right?
Yes.
I'm definitely getting that wrong.
Well, yeah, I have no idea on what the number is, except I will say there is talk about sort of tokenizing everything, right? So we can envision a world where we are trading tokens, not trading them, but using tokens to access new assets that don't exist today, and physical assets that are represented by tokens. And so if you think about it like that, there's an indefinite number that could be created, right?
What's the exact number? No, I'm
No.
kidding.
But I like the question, though, because going back to his question about how the IRS treats it, I want the more the merrier, the more to default, because now there's opportunity where I can actually buy and actually get a tax deferment or tax something. There'll be something that gets created. So I don't want more scams. I want pretty much to. What I want is a gateway where they're actually legitimizing it. They're real. There's something that's there. There's tangible something behind it. I don't want these things to default, but there should be a mechanism. Just now, people buy defaulted credit card debt, any type of debt. I would envision a product that probably we would create where we are buying and exchanging defaulted coins for our coins, and basically gaining on the tax advantages.
There's always a buyer for any type of product. So those that go bankrupt, the tokens that go bankrupt, and they're basically useless, I think they still will be traded to some extent, and they will go offshore. Even those that are banned, let's say, they're going to offshore. And I have even heard that in Vietnam there is a coin that is basically backed by mafia, and there's just laundering money through a coin. And the question is, what can you do, right? try and stop a distributed application.
Right.
So that's where actually the power lies in distributed applications. I hope that there will be no scams and so on, and I think that the market self-regulation, adoption, will weed out the bad players.
Okay, one last question, and the gentleman with the glasses, straight through, sorry. He's been patient. Tax question. Come forward.
You gotta come forward. Whisper down the lane. Yeah, whisper. And by the time it gets you, it's a whole different question.
You have to ask the same question.
Just wanted to expand on the tax question that he had. I'm a CPA, former Big Four also. It is, going back to what Angel said regarding tax deferrals, you're able to do a 1031 exchange similar to like a real estate property, meaning that if you buy and sell a big similar coin, you can actually defer the gain. So if you even if you make $1 million profit and you buy another coin, you can defer that gain. You don't have to pay taxes up front.
Make sure you get your own advice for your taxes. One more question. This guy, he's going to jump up here. Let's do answers. I know this poor guy. We attacked him. No. At the party, but with drinks. Over here.
So my question is for Arturs about your bond offering that's coming up. I'm a finance attorney, and I'm just curious how you're going to offer your purchasers the same sort of underwriting process that normal lenders would get, and more importantly, what sort of securitization you would be able to offer protection, forward looking, CC1 to etc. that normal credit agreements have. I know you discussed some sort of restructuring terms that you would offer, but if you could just go into those a little bit more.
All right. First of all, we're a technology provider. That's number one. We're not.
Repeat the question, is that okay?
The question was about the bond offering and how it basically conforms with sort of regulations.
No, it's great. I guess the typical type of bond offering you would see on the market today, where creditors and lenders are able to have underwriting of the company, the assets, etc.
Right.
And also the sort of protection they would get from a secured indenture, so to speak.
Right. We actually allow other participants, such as auditors or legal teams, to work on the documents and submit. It's basically you have to evaluate the risk yourself. You can involve rating agency. You can involve other participants within the ecosystem on the distributed ledger to actually assess the risk yourself. We're not the counterparty there. We're not issuing the bonds ourselves. We're allowing companies on one side to issue bonds, and on the other side, investors to invest in them and assess the risk themselves. Did that answer the question?
It did for the first part. So what do the companies offer for protection for their purchases?
We are planning to build out also the escrows, so that, for example, the servicer of the bond, there is another participant in the network, sort of like a servicer or the one that collects the money, will actually go after the company that is defaulting and so on.
So these companies might be able to, and I know this because I'm an advisor to FIC, is to provide some type of security behind it. It's going to be secured or unsecured debt, but that in itself is up to the investors to do a lot of due diligence, and allowing service providers like yourselves to work on the documents and help these companies to actually build a robust debenture.